Welcome to another marriage and money workshop. I'm thrilled about this because you guys have sent in your questions and I heard you, which is we know we want to work together on our finances. How do we do it? And some of you are looking at your banking options. Where do you stash your cash? How do you take care of the essentials and save? So I am glad this is my go-to person. This is Joe Mecca from Coastal Federal Credit Union. He's working with me today to answer your biggest money questions. Thank you so much, Joe, for coming on.
Oh, glad to be here. Glad I could help out.
Great. So in case you're new to the community and haven't read the newsletters, I actually bank with Coastal, and my husband and I have been very happy customers. We even got a mortgage through them. And there's several reasons for that, which we'll probably get into later. But where you bank and how you handle your finances is absolutely crucial. It's one of those foundations. And Joe, I'm sure you could agree that if you don't have a system that works for the two of you, if it's complicated, or if it doesn't cover your actual needs, your finances and your relationship is going to suffer.
Oh, absolutely. That's communication. I would say communication is a critical part especially when you've got combined finances and knowing that you're both on the same page. You've got the same goals. That's important if you're just starting out, but all throughout your marriage. So, that's probably more important than where you do your banking, how you do your banking. It's that you're communicating about it and getting on the same page early on, just to make sure that as you do that, you're checking in with each other and you're establishing goals together. Even if a lot of marriages, one person handles all the finances, but the communication is critical to make sure that you're still moving in the same direction.
Yeah, I know in our marriage and some others, there's that go-to person, but still, you got to know where the accounts are. You should know what the balances are. You might not be interested in the transactional level. I know my husband, he's like, are the bills paid this week? And we'll sit down and make sure we'll do our monthly money dates, but absolutely being on the same page with goals. And I know for some listeners, they're newlyweds or they're engaged and they're getting married and they want to get this right, Joe. They're looking at how do we set up our finances as a couple? And the good news is there's a lot of options. The bad news is you got to sort through those options and figure out what's the best. So I was kind of wondering if we can start off talking about maybe some essential things to consider and accounts to have as a couple together to help you take care of the basics.
Oh, sure. So, for us, and I'll speak to kind of, my relationship, because that's what I know best, right?
Yes.
For us, we do a lot of our banking at Coastal. And I'm a little biased because I work here, but I think if I didn't work here, I'd still do all my banking at Coastal. I really like the options that we have available. But in our case and in every marriage, you have to kind of look at, well, do you want to have your accounts all together? Do you just want one joint account? Do you want a couple joint accounts? Do you want to have individual accounts and manage your money separately, or a combination of the two? That's what we do. We have some joint accounts that we put together for household bills and our primary expenses that we both feed into when we get paid. But then we each maintain our own individual checking accounts for our own discretionary spending or the things that we've individually made ourselves responsible for. So while we both contribute to the monthly bills for the household, and that comes out of that joint account, I'll handle the upkeep of the house. So that'll come out of my account. Or she handles the groceries and things like laundry and the supplies we need around the house. So she'll manage that out of her own account. And then we each handle our own discretionary spending. So it was kind of a balance between what we have to do together and then what we choose to do individually. And I think that works out well for us because we're not managing each other's every dollar.
Yeah.
We cover all the big things together.
Exactly.
And individually, we've got choices to make. How do you want to spend your discretionary money? So we're able to do that without causing conflict because you've carved that out as your own. We've covered our bills, we've covered our spend, our savings, and then what's left is we're able to handle individually. We probably have more accounts than a typical marriage needs. I like to handle it that way. So we've got a joint checking account that we use to do the main finances, the main household bills. We each have individual checking accounts for our discretionary. And then we have a health savings account. So I always recommend to people that if your health plan enables you to have a HSA account, look into doing that. There's some advantages to doing that. You can make pre-tax contributions that can grow tax deferred, and then you can spend it on health expenses tax free. And then if it actually works like an IRA account, so once you reach retirement age, you actually pull money out of there tax free. So that's always a good option if people have that. So that tends to be something that people forget about, is talking about that HSA account. But we have one that works really well for us. Fund it automatically out of my payroll every 2 weeks. So that's there. It covers our medical expenses if and when we need it. And otherwise, it's just sitting there growing.
So let me ask you real quick, because we're in the same boat. Like, we have our joint accounts and then we have our individual accounts. Was that something you talked about early? Like, okay, we still want to have, we call it our fun money accounts, because he spends it on tech stuff. I like to, travel and eat, and we love and respect each other, but he laughs at how much I spend on these things and vice versa. How did you come up with your system?
I kind of naturally evolved that way. I don't know if it was a conscious decision that, we should structure our accounts this way. A lot of it was just the convenience of how to make it happen. She would tell you that I handle all the money, which isn't true. We together handle it all. But we needed that one joint account. So even though I'm the one who goes in and makes sure that we've got all the bills paid, we needed a way for both of us to be able to fund that. So that's why we set up a checking account. It's under my account, but she's joint on that. And then so on payday, she gets paid, goes into that account. On payday, I get paid, money goes into that account, and we kind of set our budget based off of what we've expected to spend on our household expenses over the coming month. I've got a spreadsheet. I'm old fashioned. I do a spreadsheet. But I keep it like a 15-month look back, so I can figure out what our average bill is for each bill that we have, what the maximum bill is for each bill, and then we set a budget based on that and have an idea of what we should each be putting into that account together to make sure the bills are paid for the next month or 2 months, depending on how far ahead we're looking.
Gotcha.
I like to look a month ahead plus one mortgage payment. That covers it.
Okay.
And then
I like that. Having that buffer just in case.
That buffer.
So you had the account and then you added her to it. It's not.
Yeah. Well, we said that I had my own checking account and she had her own checking account. And then when we got married, we set up the joint account.
Okay. Gotcha. Because I know sometimes a lot of people where their current bank is like what they grew up with, what their parents had or whatever, and they hadn't done maybe a consideration what's out there. And so like for us, I think I was at one of the like big banks, and basically since I like spreadsheets like you and the numbers person, he was like, well, okay, that'll be the joint account. Just add me. And I think some couples are worried about like, is that complicated? How do I do that? But it's just a matter of, can you do that online now? I just asked that. Like, everything seems to be moving online.
Oh, yeah.
I don't want to date myself. We had to go to a branch to take care of that.
Yeah, now it's easy to set up pretty much any account online. Adding extra savings accounts, extra checking accounts, those are easy to do. You can even open your main account online, and in that process, if you want to set that up as a joint account with somebody, that's easy to do too. Technology has gotten us to a new level where we're able to turn things around faster. You don't have to go into branches and fill out as much paperwork anymore.
Yeah. I love that. And I know every couple has a way to handle their system, and I really appreciate you sharing your spreadsheet and your system with that. I know for us, I I have a Google Docs, and we love to that's our main budget. And then I use apps to kind of just keep track, make sure nothing goes off the rails. But one question I got from the community was, how do you handle like the family budget when one of you has maybe an office job, steady 9 to 5, you have a steady paycheck, and the other spouse is either an entrepreneur or maybe they're in sales where the commission can vary month to month? Are there any ideas on suggestions on how to handle the finances without screwing things up?
Sure, and we actually experienced that for a while. A couple of years ago, my wife had started her own business, and so her income was variable. We were a little bit fortunate in that case because mine was the larger income, and it was the steady income. So in that case, we were actually able to set it up so my income covered all of our important bills.
Okay, so you guys made that choice, like, let's play it safe and just completely rely on one income.
Yeah, so we relied on one to cover our core expenses, and then plus contributing to our savings, and then hers became the discretionary money.
Oh,
so then
okay.
we would talk about, okay, we're gonna, we need money for entertainment or food or just
Gotcha.
The discretionary piece of it. We were able to budget off, okay, that's the variable piece, and if we've got a little bit more, we've got a little bit more to deal with, and if we have less, then we'll just not do that discretionary stuff this month. So we got through those those couple years fairly well, because we were in that position. Now it gets more complicated than if the variable income is half, or it's the larger chunk, or it could be all if you're both on a variable income. Yeah. So that case, you need to take a closer look at your financial picture. I say it's important to track your expenses closely. One, to have an idea of where you came from and where you're going, and how to plan ahead and budget. That's true in all situations. It's critical when your income is variable. A lot of people recommend budgeting off the lower income.
Yeah.
So if not just the lower chunk, but what your combined income looks like in your lowest month. So maybe set your budget off of that and make sure that covers all of your core expenses, all of your savings goals. And then you can do your discretionary on top of that as that variable amount pops in. It's important to prioritize. Obviously things like housing and utilities, and if you've got debt payments that you're paying down, those are going to be important, and you're not going to have much flexibility on those. But when making decisions about which phone plan do we get, which cable plan do we get, or do we have cable? Yeah. If those don't fit into your budget when you're talking about variable income, you might not be able to squeeze all those in. So you have to really prioritize the order in which you would expect to pay your bills if money was limited, and then decide what's absolutely critical that gets paid every month and what could be optional. And then I'm not telling people not to pay their bills, but I'm telling people to plan those extra bills to fit in or not fit in. If it doesn't look like they might fit in. You gotta
have the house. You gotta have the food.
You might have to make some decisions about, what bills you take on in that situation. Obviously, if money's variable, you're going to want to have a strong emergency fund. You might want to put away a little bit more than the recommended 3 to 6 month expenses. Perhaps even having a second separate account. So you've got your emergency fund to cover your emergencies, but then you might have, your excess savings fund, where when you have a month where your variable income's a little higher than normal, you put that extra away, and that way you've got some padding built in to cover the months where it's a little leaner.
Yeah, those are really good suggestions. I know we did that. I would love to say we were geniuses when we decided it, but it was a matter of practicality. At that time, we got married, and my husband just graduated college and had an internship, and I honestly didn't know how long it would last. So we thought, okay, let's put the bills. Let's, when we look for an apartment, when we do the basics, it'll be his income. And then we've kind of always come from that mindset. And I have to say, there are times where we're like, oh, that would have been great. Small things, but in the long run, it's given us a lot of freedom to experiment. Becoming self-employed, like you mentioned, you got to have a buffer, you got to have savings. It also gives options for, buying a house where you base it on, what we did is we based it on his income. And so we don't feel like we're house poor because there's still a second income that can help out. And, there's always a house project that
Oh
has
yeah.
to get
Oh,
funded.
definitely. Definitely. I was always looking ahead to what the next one might be.
Yeah. So you mentioned spreadsheets. Okay. So we're kindred spirits on that. Are there any like apps and tools that either you used and loved, or, you've seen, working with Coastal that have been very helpful for couples that just want to stay on top of their finances?
Sure. One tool that I always look to is just what's within your own online
Hmm.
banking system.
Hmm.
Yeah, I like to tell people to automate as much of your finances as you can. Because some
Yes.
people get a little squirrely around that because they feel like they might not have control. But if you're tracking what you're spending
Yeah.
and you have an idea of what is predictable and what isn't, you can kind of keep an eye on what to expect each month. So I say go ahead and automate as much as possible. So within Coast, I've got all my accounts at Coastal, so I schedule as much as I can within the scheduled transfers. It's a tool
Yeah.
that's built into our online banking. So things that are within the credit union account. So if I'm paying my credit card bill, she has an auto loan. So if we're paying our auto loan,
Hmm.
paying our mortgage, even transferring money into savings. So I've got money that goes into my checking account, but then there's a portion of that I roll over to our money market account for our short-term savings.
Yeah.
And actually, remind me to talk more about that in a little bit, because there's
Yeah.
something I do with that seems a little complicated, but it works well for me. But all that's automated,
Hmm.
all that's
Yeah.
scheduled, so I can go in and tweak it over time as things change. But for the most part, every month, every paycheck, I know what money's moving where. I do that with my payroll. So we've got automatic
Hmm.
payments or contributions going into 401k, automatic contribution going into HSA. So that's getting funded automatically. That's even coming out before the net pay hits your checking account. So
Gotcha.
automate that. Use your bill pay options. There's a couple different ways to do that, but I actually like to sign up for e-bills, so then my
Hmm.
bills actually come to my credit union account automatically, instead of me getting a paper statement from Duke Energy.
Hmm.
It comes electronically to my bill pay account, and I have it set up to automatically pay that bill when it's due. So most of our bills are set up to auto pay based off of that e-bill. In fact, I think I only have two bills that we actually go in and pay, I'm going to say manually every month. We're actually going and set that amount
How
aside.
hard?
Our water bill, yeah, our water bill, because they don't have e-bills. So the water
Yes.
bill, we get an email saying what the bill is, and then I go in and I schedule that in bill pay as soon as I get that. Same thing with my credit card payment. That's a transfer for me.
Hmm.
Um, but I pay my balance in full every month, so it's easier for me just to go in and do that manually rather than try to schedule something and not know. It's a variable amount each month.
Yeah. Yeah.
So we do that manually. And so I touched on savings a little bit too, but we always talk about automating bills. Automate your savings. So I
Hmm.
mentioned the 401k and the HSA contribution. That can be done right on a payroll for most people. So that comes out,
Yeah.
and that you're contributing to that. You don't have to worry about that. Um, Same thing with I've got set up monthly automatic drafts to my IRA account, and I schedule that in my budget. I know
Hmm.
that that's part of the overall picture, but that monthly transaction is scheduled out for the entire year, and that just keeps going.
Wow.
So I don't have to worry about making that payment. It's tempting sometimes, like, oh, I've got this money sitting here. I know it's for my IRA, but we want to buy something this month. I don't do that. It's that
Hmm.
payment's gone. I set it and forget it, right?
Yeah.
Well, track it because you want to know it's there.
Well, I mean, you have check-ins and everything,
Right.
but yeah, sometimes we're our own worst enemies. We want to kind of dabble and mess with it. Can I ask you, do you guys you say you keep tabs on it? Is it like on a weekly basis, paycheck basis, or monthly? I mean, how do you guys do it? How frequently?
Um, so I like to do all the big numbers monthly.
Okay.
And I found it kind of an interesting phenomenon as I've been doing my own finances is the cycles don't line up. You know,
Hmm.
people get paid every other week or twice a month. So and we're interesting because like my paycheck is every other week, hers is twice a month. So they don't always sync up. But for the
Yep.
most part, you get paid twice a month. Your bills budget monthly.
Hmm.
Most people have monthly bills. So a couple of them are quarterly. Once in a while, there's an
Hmm.
annual bill, but for the most part, your bills are once a month. But then your spending habits are weekly.
Yeah.
So there could be some
Always.
months where you've got 5 weeks, some months where it's 4 weeks. So those don't always sync up. So we track the big stuff monthly. We do the monthly
Mhm.
budget on our main bills, and that's when I do my check-in and look at all of our accounts and kind of gather up what all of our assets are and liabilities, and make sure we're tracking those well. That's when we forecast the next budget. And generally, we don't make many changes to the budget unless we've had a change in payroll. If one of us
Mhm.
got a raise or made different withholding, if the tax law changes and withholding changes. So unless there's some material changes to what our take home is going to be, we don't make too many changes to the budget unless we're seeing things change with our bills over time. I found that even with the variable bills like
Mhm.
utilities, they don't tend to peak at the same time. So if you
Yeah.
get a good understanding of like, okay, well, I know if I budget off the high amount or the average amount for my electric bill and my gas bill, they're not going to both come in high at the same time. So it
Mhm.
actually ends up being fairly level um,
Good.
throughout most of the time. Now that might not be true for everybody, but we found that for the most part, the bills that we're paying every month kind of average out to close to about even. So we're funding that, every other week,
Yeah.
but we're tracking it monthly. But as far as discretionary spending, and I'm glad you asked that, that is week to week. I look at mine week
Mhm.
to week. She manages hers a little bit different because she gets paid twice a month, so she looks at kind of a every 2 week
Okay.
outlook, and plans hers accordingly. I like to look mine week to week because I know that my spending trends are kind of on a cycle.
Mhm.
In a typical week, I can predict what my discretionary spend is going to be. So I actually use a separate app for that. I use Good Budget.
Oh, I never heard of that.
Yeah,
Okay.
it's simple app. Sits on your phone, but it works kind of like an envelope system. You can
Ah.
put money into
Mhm.
into envelopes, and I only have two. I only use two. I've got just my plain discretionary spending, uh,
Mhm.
and then I have an envelope that I call reserve, and that's kind of my short term discretionary that doesn't fit into my week. So things that I know I'm going to spend money on in the short term, but it may be it might not need the money for that until next week or next month. So what I do is my weekly budget I just reset every week.
Mhm.
So if I've got a little bit left over from my weekly discretionary money, that I can roll over into savings because
Yeah.
I didn't use it, but I'm on to the next week already, and I don't want to get into the habit of rolling that into my next week's spending, and then you
Yeah.
can really inflate what your spending is because it's like, well, I had extra money this week, so I spent more, and then it's easy to get into a habit of spending too much. So for me, it's yeah, if I've got some left over, I just move it to savings and start fresh the next week. But on that little bit of reserve money, I actually add to it each week. So if I didn't spend it this week, I know I probably will have an expense coming up. And that's averaged out for me fairly well over time. Expenses tend to pop up, maybe quarterly.
Mhm.
It could be something I need for around the house or an oil change for the car, something that I know would make a big dent in that weekly budget, but doesn't
They
make
always
a
pop up.
dent
Yeah.
in keep a little money on the side for that. So
Gotcha.
I do like to track that kind of separate from everything. And when I was younger, I actually wrote it in a notebook.
Hey, you're on top.
Everybody
Okay,
made
so
fun of
you're the
me.
right person. You hired the right person.
Everybody made fun of me because I kept a little notebook, but it kept me out of trouble.
Yeah. Yeah. No, that
Um,
that's that's awesome. And I kind of want to talk to you real quick if you don't mind. Um in the news, like, people see a lot of banks are like changing their accounts, and there's all these fees that just seem to be increasing, and a lot of couples are thinking, okay, well, since we're going to start again anyways, maybe at this point, this new beginning, we should look for a better banking option. And I know some people are somewhat familiar with how credit unions work, but I think it might be what they think of 20 years ago.
right.
We had like a credit union that used to come into our school, you know, um, and do like the basic budgets, and, you
Mhm.
put money into savings and stuff. But I saw yesterday your episode Coffee with Chuck.
Oh, I'm glad somebody's watching it.
Hey. Um, and it was interesting because you guys were giving money to your members. So
Yeah.
that's completely different with banks, and I'll do like very high level overview. Like with banks, they have to answer to their shareholders. If they have
Right.
profits, that's who it goes to. They take care of the bill. So to a degree, as a business, that's how their model goes. But credit unions are different because it's not customers. Like I'm part of Coastal, I'm a member.
Mhm.
Could you kind of go over what that means and how that compares with banking?
And they're two, I mean,
Yeah.
they're two very different models. On the
Mhm.
surface, products,
Mhm.
services, almost identical. In
Yeah.
most cases are identical. What we do and what a bank does is very similar. But why we exist and how we're structured is very different. So you mentioned
Mhm.
that they're for profit, they're
Yeah.
corporations, they're owned by shareholders. Um, they're obligated to make money for their shareholders. They actually have a fiduciary responsibility to make as much money as possible for the people who own them, not their customers. It's at their
Mhm.
customers' expense. Um, Not a bad model if you're a shareholder.
Yeah.
Credit unions, on the other hand, are cooperatives. So our owners are the people who use us. We don't have customers, we have members, but if you think of a member as a customer, we're owned by our customers. So being member owned changes our focus. It's our entire purpose for existing. Provide those members with better banking solutions and help them in their financial journey. So we don't have a profit motivation. We are profitable, and
Yeah.
in some way we need to be, because as you grow, you need to have retained earnings and be able to shore up your reserves to be well capitalized. So you want to make sure there is. We have a savings account too. It's our reserves.
Yeah.
So we want to make sure we're feeding that, and you have to be profitable to do that. But we don't have to make excess profits,
Mhm.
because if we do, that money goes back to our membership.
Mhm.
So we try to design our business model in a way that feeds money back to our members, and we do that. There's two ways we do that. One, we can do that, simply by issuing a big payment. So that's what we did. That's what we did yesterday. Every year for the last 7 years, we've taken a look at our financial condition at the end of the year. Said, okay,
Mhm.
we've made X amount of dollars in net income. We've funded our reserves. We've set aside money for improvements, new
Mhm.
branches, new technology, investments back into providing better service to our membership. The excess we can give back. It came
Mhm.
from our members. It belongs to our members. So each year we've taken a look at what we've made and how much we can give back to our members. And we've done it as basically a lump sum payment, as a special
Mhm.
dividend. So this year it was $2.5 million. And to do that, we took a look at aggregate relationships. So how
Mhm.
many, what was the loan balances that our member had,
Mhm.
plus what was their average deposit balance for the year, and add those together to form their total relationship. And then we look at how long they've been a member. So
Mhm.
what kind of loyalty do they have?
Yeah.
Are they using the credit union a lot, and have they been around a long time? And those two things factor into a percentage of the relationship goes back to them as that special dividend. So yesterday it was 51,000 members earned a dividend. We call it our loyalty bonus, and that total was $2.5 million. So that's a cash give back that we do.
Yeah.
And as long as we continue to have good years, we'll aim to continue doing that for our membership. But the other way we actually can give back to our members is just in our business practices.
Yeah.
So we can afford to give a little bit more on a deposit dividend, or charge a little bit less on the loan rate, or we actually have fewer and lower fees. So this past year, 2017, we actually eliminated half of the fees we were charging. Um,
See, that's
so back
that's
in our
the
member
difference.
pockets. Yeah, we got rid of half of our
Where we
fees.
came from with the big banks when we first opened our joint account, and it was the fees that killed us.
Yeah,
Just
and then we're able to do other incentives throughout the year too.
Mhm.
But when we took a look at that, and for the last few years, we've actually quantified, what does that big picture number look like in terms of our members' lives year over year. Uh, for 2017, we were able to calculate that we gave back $23.5 million in member give back. So that's through lower fees, better rates on deposits, lower loan rates, and then some of those incentives, which includes that loyalty bonus that we paid out yesterday. So, we're able to say that by doing business with us versus
Mhm.
doing business with one of the big local banks, and we compare ourselves to calculate that number. We compare ourselves to the big local banks. That's a $23.5 million savings that our members experience. And if so, you watched the video that I did with Chuck.
Yeah.
We talked about the fact that that's only what we can count.
Mm-hmm.
There are fees that we don't charge that we know some of the banks do charge, and we simply don't have a mechanism to calculate that because we don't have we don't have a record of those activities because there's no fee associated with. So how do you add up all the times that we didn't charge something that somebody else would have charged a fee for? Yeah, it's tough to count all the zeros, I said. If we did that could be millions of dollars more on top of what we've already been able to quantify. So it all stems from our purpose. We exist to help our membership. We're not motivated by making a profit to benefit somebody else. So when we do, we're able to put that back into our members' pockets and really help them try to do better banking so that ultimately you can live a better lifestyle.
Yeah. And I love that. And I'm not saying like all banks are evil and stay away from them. But what I'm saying is look at all your options. Banks, right. They treat it like a business. And, that's what they are. Don't take it personal because we found out from phone calls, they don't. Like we've been on hold, right. Gotten the script, with different situations, but that's their business model. But now there's so many different options and credit unions are changing. Yeah, there's, some smaller credit unions based on what they have. They can only do so much. But credit unions like you guys at Coastal, mm-hmm. You offer all these fantastic services, sometimes even more than I've seen some other places. Like we bought a house and we used Daymark Realty. And we love the service. Yeah. And then there was a bonus, we had a great agent. I loved Anita. She was fantastic. She listened to exactly what we want and we're really happy with where we are. But that's something that you offer members. We got, $500 off closing. We were happy with the rate. So those are things that kind of baked into the business model. So I want everyone in the community to know wherever you bank, you should feel like they're a partner with what you're doing. And I'm just a big fan of credit unions. I feel like they're right up here. You got the customer service and now you have the products and the services. So, mm-hmm. Give them a look and see if that's the best option. Now, see, I was going to wrap this up, Joe, but you told me to circle back to you. Real quick, I want to know about this money market system you have.
Okay. So Coastal, you're familiar with Coastal's Go Green products. Mm-hmm. So we've got Go Green checking where that pays a dividend on your checking account, which dividend checking has really gone away for a lot of institutions, and we still have it. And I think it's good for members. If you're actively using your debit card, you can earn a higher rate on your checking account balances. So I actually keep my emergency fund in my checking account because it can earn that yield. It's more you can get into any savings account or even any certificates. Mm-hmm. So I keep my emergency fund. I just have to make sure that I know what that dollar amount is, so I don't go over it. But tied to that, we've got that money market account where if you're doing the transactions in your checking account, we also pay a higher rate on money market account. So I put my excess savings, my short-term savings anyway, into that money market account. But I use go back to my spreadsheets. I use a spreadsheet to segment that out mm-hmm. Because you can have different savings goals that are in your short term. Mm-hmm. There's money that you need to keep liquid. You're going to need it in the near future. So you don't want to tie it up into a certificate. You don't want to necessarily invest it because investments are for longer term goals. Mm-hmm. But for that short term money, you want to keep it in a liquid account. Money market accounts are good for that. But if you've got different goals, how do you keep track of it all? So I just use a spreadsheet to keep mm-hmm. track of my different goals inside of the money market account. So I've got a money market spreadsheet that breaks everything out. So I do keep a little bit of the emergency fund in there, but I save it up for a new car. So I've got a new car line on there. I've got the fund budget, so that's going to pay for our vacation this year, and then kind of what my next goal might be. So I've always got that. What's my next goal, mm-hmm. and what am I saving up for? And so as I put money into that money market account, every time I get paid, that money automatically transfers. But then I automatically break that out across the different lines too. So I make sure that I'm filling each bucket. And then when I have to go to spend that money, I don't look at the money market total. I look at the total on that spreadsheet that says, here's how much money I've gotten in the vacation fund. not in the money market account.
Gotcha.
So that works well for me, and it allows us to not have a bunch of different accounts to keep track of everything. Serves the same purpose, but it requires a little bit more discipline on my part. But it keeps things a little bit cleaner, a little bit neater from a banking relationship standpoint.
Love it. Well, thank you for that bonus
Yeah,
tip.
no problem.
Thanks so much, Joe. I appreciate you taking time out of your lunch to chat about finances, because I really do think that if couples can have a system that works for them, and if they have a partner, wherever they bank, that is helping them reach their goals, it just takes a lot of the tension, a lot of the stress out. So I really appreciate you taking out the time.
Oh, no problem. I'm glad to have you. I'm glad you had me.